I need to come back. Guys, we'll start off with that. Okay, uh, guys, the last topic for today. It's again a 20-minute topic, so let's just try looking into it. For the ones who are writing the November exams, for you guys, there is two topics left. One is on the inventory, that final FIFO, LIFO weighted average, and then there is a account current and final accounts for the non-manufacturing, and all the three things put together would take around 1 hour. I'll be doing one of a session maybe on Thursday or Friday for you guys for an hour in the evening. For the ones who are writing in November, for you guys 2 chapters would be left, so we'll see. For the ones who are writing in May, right? Sorry, November is not that, December now. Okay, now first let us try understanding what's the concept of sale of goods on approval or return basis. Guys, if you understand the logic, the journal entries are extremely easier to do it. See here, Gagandeep, if you guys have understood law, this is easy. Gagandeep sends goods to Karthik without Karthik asking it. What Gagandeep says is, boss, I'll send you the goods. If you like it, use it. If you don't like it, return it. Are you clear? If he likes and uses it, I will treat it as sale. If he returns it, then it will be reversed. That's all is the chapter. You understood? Karthik never asked for the goods. Gagandeep sent him the goods, telling that, boss, you want, you use it. You don't like it, return it. If Karthik uses it, it becomes sale. If it does not use it, whatever you have done earlier, you are going to be reversing it. Sir, it is so easy. The answer is yes. Then where is difficulty? Let's say I send to Karthik goods on 30th March. And I tell Karthik that you have 2 months to return or accept the sale. For me, my accounts are getting closed on 31st March. On this date, how do I record the transaction is where the challenge is. So if you have understood this portion is also little easier. Now, on 31st March, has the sale happened? On 31st March, has the sale happened? No. Who's having the possession of the goods? Who's having the possession of the goods? Karthik. But who's the owner of the goods? Gagandeep. So we have to make sure that we give credit back to Gagandeep, saying that he is the owner of the goods. This is the whole logic of the chapter. Understood? I am sending goods, he approves, it becomes a sale. It does not approve. Then it's not a sale. He approves, good for me. If it does not approve, it becomes terrible for me. Done? Now, here there are 3 cases of doing accounting. Okay. 1, he sends it. Case number 1, he will treat it as an ordinary sale. He does this frequently. Third one, he has lots of transactions numerously. So there are 3 scenarios. 1, he treats it as an ordinary sale. When he treats it as an ordinary sale, that means he would just be doing once in a year, twice in a year, not too many transactions. So he does not want to break his head. Are you clear? When he says frequently, he has this habit of sending it every month. Numerously means countless transactions. You don't know how many transactions are happening. Are you clear? So let us treat this case first, then we'll go to these two. The last one is not so important, so we'll focus on the first two right now. Now, what was the case one? Treat it as ordinary sale. Shall we start? Shall we start? Now let's say Gagan sent 100 units at 10 rupees to Karthik. Let's say on 1st April. The moment you say you're going to be treating it as ordinary sale, you have to pass the journal entry in the books of Gagan as ordinary sale. And what's the journal entry, Gagan? Guys, what's the journal entry? Guys, what's the journal entry? Karthik. Okay. Now, this happened on what? 1st April. On 5th May, Karthik said, I want the goods. On 5th May, what did Karthik say? That he wants the goods. If Karthik says he wants the goods, is it a sale? The answer is yes. Should I record anything? The answer is no. Why? Because sale has already been recorded. Are you clear? So when you treat it as an ordinary sale and Karthik gives an approval, you don't have to record it again. Are you clear? Done? Now, Karthik says, boss, I want the goods, but I'm ready to pay you only 900. Karthik is saying what? I'm ready to buy the goods, but I'm ready to pay only what? 900. You have already recorded sale as what? 1000, but he is ready only for what? 900. So you have to reduce. How will you reduce? Okay. Karthik did not know the value of the goods. He sent an approval for 1100. He sent an approval for what? 1100. Now what will happen in this case? See, the sales value was 1000, is agreeing for a price of what? 1100. So you should be increasing the sales by what? 100 rupees. So what will be the journal entry? Karthik. Are you clear? Again Karthik to sale, but only the difference amount. Done. Next part. Karthik said he does not want goods. Karthik said what? He does not want goods. What will be the journal entry? If Karthik says he does not want the goods, you have to reverse it. That's going to be what? Are you clear? Now, I'll tell the other case here. Sold goods to Karthik on 1st March. Karthik has to accept it before 30th May. Goods costing 800 is being given for 1000 to Karthik. Understood the question? I sent goods to Karthik on 1st March, telling him that 30th May he has to accept it. Right? The goods costing goods costing 800 goods costing 800, you are given it to Karthik. Now my question is, when I sent goods to Karthik, I would have written a journal entry on 1st March as what? Karthik to sales. Are you clear? On 31st March, if you keep this, what will happen? Jami, doesn't matter, I've just kept it one sale, just look into it. On 31st March, guys, see here, has the sale happened on 31st March? On 31st March, has the sale happened? No. But the goods are with Karthik. Now in that case, how do I record it? What I do is, Guys, I'm gonna reverse the sale entry, which is gonna be sales to Karthik. It's just one sec. Shri Kumar, if you know it, chill. There are others who are learning for the first time. Once I do it, maybe you can check. So you're going to be reversing the sales to make sure that you're you're canceling the sale. Now you have to record for the stock with the customer. You have to record for what? Stock with customer. So you can write it as inventories with customer account debit, inventories with customer account debit to trading account. Please remember it's going to be 800 and 800. Are you clear? So it shall be at what price? Cost price. This is telling me that the goods are there in my trading account, but not with me, but with my customer. Are you clear? At the cost price. Guys, let's start this entry. Badri sends goods to his customers on sale or return basis. The following transactions took place during month of December. Correct, Kumar. That's going to be at the end of the year. Send goods to customer on sale at cost plus 25% is equal to 80,000. So, see here, if cost is 100, he has added 25% margin and he has given it at 125%. Right? So what is going to be the cost price and the selling price here? Do we have to really look into it? Now see here, on December 2nd, You'll first write an entry as what? Trade receivables to sales, because I don't know the customer name. 80,000, 80,000. That's going to be on the 2nd December. Goods returned by customer. Goods returned by customer. Either you can do sales return or you can do the reverse of it. Sales return to trade receivable. 35,000, 35,000. Guys, this is the most easiest because you are treating it as a sale. Received letters